on the back of a brokerage note. Take us through the details of the note.
That's right. So Maruti Suzuki, as you said, is in the spotlight because of a brokerage note by UBS in which it has downgraded the stock to neutral, citing a weak demand environment, particularly in the small car segment. The brokerage has set a target price of 13,300 and flagged low confidence in Maruti's ability to regain market share as the competition for the second spot in the Indian auto market is heating up. Now, with demand headwinds and rising competition flagged by the UBS, the street is watching out for Maruti shares, which are currently trading nearly 1% lower.
That's the view coming in on Maruti Suzuki, but let's shift focus then. IT sector could see some more pressure in the next few years, says Sandeep Agarwal of Sojo Investment Managers. He also shares his growth expectations in the light of muted earnings that TCS reported. Let's go across and listen into what he had to say.
The miss in the revenue is quite sharp, and the deal wins are okay. Unfortunately, despite BSNL ramp down and no wage hike, the margins increase is also very, very nominal. So I think, there is nothing to cheer about in the whole number. That 5,000 addition also on a base of 6 lakh, I think is a very, very nominal addition. So I would say that, on anticipated lines, as we have maintained our view, this large caps in IT are as 5-6% growth story for long term. Broadly, this has become a 6-7% revenue growth story sector for large caps. Mid cap could be slightly better. Some people are shifting their FMCG investments to IT as a defensive, and that could be only reason why there could be some stocks could hold on a little bit. But otherwise, I think this sector, I don't see the large cap growing at more than 6-7% for next 5-7 years at least. It is very, very tough to grow beyond.
All right, so that's the outlook coming in on IT. But Kanishka, you picked up Bharat Forge for us on the back of a brokerage note again. It's a downgrade coming in. Tell us what are the details of this note?
That's right. So UBS has given a brokerage note on Bharat Forge and it has downgraded the stock from buy to sell, slashing its target price to 1,215 rupees. Now, this downgrade is driven by global macro uncertainty, continued weakness in the company's non-defense segments, and muted commentary from end consumers. Now, UBS's bearish outlook has raised concerns around earnings visibility, keeping the stock under pressure today, trading nearly 1.5% lower.
Okay, so that's Bharat Forge down 1.5% as we speak. But Harsha Upadhyay, CIO, Equity, Kotak AMC is positive on defense.
If you like this video, then like, share and subscribe to ET Now.